What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. We're going to talk about these stocks on the macro and the micro time frame so we get an idea of what's happening on the overall picture and what's happening on the day-to-day. But before we get started in talking about our charts and price targets, we have to talk about some economic events that happened last week and some things that are happening this week that may help push markets higher, or it may force them to pull back to retest lower levels. So let's go ahead and get started by the main events that happened last week, which was the release of the unemployment rate. This happened on Friday, and it caused a little bit of confusion because month over month we added jobs to the US economy. However, the unemployment rate still went up to 4%. That means we lost more jobs than we added, which is a concerning sign for economic growth, but it may be a good sign in the fight against inflation, which also may explain why markets started off the day so strong after that report. Remember that the Federal Reserve, when they started raising rates months ago, they started raising rates about 2 years ago, they did say that unemployment may be impacted by higher rates because higher rates make it more expensive for companies to grow and make it more expensive for companies to hire. So oftentimes what we see is companies will begin to lay off people after 18 to 24 months of the first interest rate hike. And right on time, we are starting to see unemployment tick back up, which is good in the fight against inflation because more people unemployed means less spending capital, which will fight against inflation. But if that stays consistent over the long run, of course, that will hurt our economy and our economic growth. Now, speaking of inflation and the Federal Reserve, this week we have two very important meetings, and this could cause some uncertainty and volatility in the market, and we'll talk about those levels in just a little bit. But before we talk about those levels, first and foremost, we have the CPI report, which is expected to be released this week. This will update us on the latest inflation reading. Inflation has been lingering around 3.2 to 3.5 to 3.4% so far this year. This is a significant improvement from where we were in 2022 at 9.1%. But nonetheless, you can see that inflation has been lingering above 3%, and the Federal Reserve's target is 2%. So the Federal Reserve vowed to keep interest rates high until they see that 2% mark in inflation. And so far, we have not gotten that promising sign that we're headed towards 2%. So markets have now dropped their odds of a federal rate interest rate cut. You can see that the odds of it are about 2.2%. So there's a very unlikely chance that we're going to see a rate cut on this week's FOMC meeting, so keep that in mind. FOMC meetings have historically moved markets dramatically to either direction depending on what the Federal Reserve says. So be sure to be on the lookout on the 11th and the 12th because that's when we'll get the newly selected interest rate decision. And that's when Jerome Powell, which is the Federal Reserve's president, is going to be giving his speech. Oftentimes, markets see increased volatility during these days, so you're going to have to keep that in mind when you're positioning yourself for the week ahead. Last but not least, on Friday, after all this happens, we're going to be seeing the Consumer Sentiment Index. The Consumer Sentiment Index has been on the decline over the last 3 months. You can see that it read at 69.10. You have to remember there's a lot of geopolitical uncertainties, economic uncertainties, and so consumers naturally, after the holiday spike, have now tapered back their spending, they tapered back their consumer sentiment, and we are starting to see the decline. It is expected to go back up towards 72 this month, but it's not guaranteed to. The consumer sentiment report isn't so detrimental to the market, but if we see a very sharply lower number, then it may cause some uncertainty, especially on the retail side of the market. Now, we have covered all the economic events that are happening this week. Let's jump into our charts. So, as we already mentioned, with such a heavy economic report week ahead, we are bound to see uncertainty, which also could explain why markets sold off on the lower half of the day on Friday. So you have to remember that when markets move, they're moving in anticipation of events. They're not moving based on what already happened. And so markets started selling off because they knew that this week is going to be such a critical week. And so therefore sellers or buyers in this case started taking profits on their positions. It doesn't necessarily mean that we're going to continue selling off this week, but we do have some levels for you guys to work with. First and foremost, what we'd like to point out on SPY's daily time frame is going to be this obvious weakness in its relative strength. When SPY was rallying in the beginning of the year, you can see that there was very strong relative strength. The RSI was reading above 70. But here in this case, on SPY's new high, you can see that the RSI is reading about 64. And volume was pretty weak. So this volume may appear strong, but you got to remember this is a very high wick candle, which means that the top wick is very long. So that means there was a lot of bearish pressure on this volume, which could mean that there could be a pullback this week. You have to always be careful when you see a breakout. You can see that SPY broke out above these highs, but it failed to hold the breakout. So you always want to be careful because this could be a fake out and it could be selling off for the days and the weeks to come. If you are looking at SPY, here are the levels that you want to focus on. First and foremost, you have your main resistance at 536.90, which is the all-time high. If you watched our video last week, you know our target on SPY was about 538 to 540. It fell just below that target. You can see it got rejected just below that target. If we do break above 536.90 this week, our target is still 538 to 540. So we're still keeping a very modest target because we have so many economic reports to look at and so much uncertainty. So if we do break out, our target would strictly still be 540. To the downside, we have a support at 528.60. We will remain bullish on SPY as long as it holds that 528.60 mark. Even if it breaks below, we wouldn't be quick to change our stance because when we zoom out and look at the full picture, we can see that the market is generally bullish. But if it does continue selling off and it breaks 519.50, that's when we would be a little concerned and we may start looking at the downside for different setups. The next stock on our watch list is going to be Tesla. Now, Tesla, of course, if you've been watching it, has been fighting on both sides for weeks. Since the company's earnings gap up, you can see that it ran for about 4 or 5 days straight. It has just moved sideways and has been a battle between buyers and sellers right below its 100-day moving average. So if you are a trader of Tesla and you are looking at its daily time frame, your main focuses should be that 100 and the 50-day moving averages. If you've never seen our videos before, we utilize the 10, 20, 50, 100, and 200-day simple moving averages. The 50, the 100, and the 200 are going to be the most critical if you are looking at a macro time frame because that's what Wall Street and institutional traders use in order to gauge whether a stock is currently in a bullish or a bearish trend. However, when a stock is just moving sideways in between those moving averages, it's almost in a neutral state and they're just waiting to see where they're going to take it next. That move usually happens on some kind of catalyst that moves the stock up or down. Now, if Tesla does break out, here are some levels that we are focused on. First and foremost, we need it above the 187.55 and you also need it above the 100-day moving average if you are looking at the daily time frame. Above that resistance, we do have a price target of about 198.90. We do have more price targets above that level when we will update those price targets in future videos to come. So make sure you guys check back in by subscribing and liking this video. To the downside, we have a support at 166, and these are the two price targets below that point with a major gap fill down to 145 if it does lose 157.50. The next stock on our watch list is going to be Apple, which has surprised us in continuously moving higher over the last few weeks, despite the fact that the company is posting declining sales. Of course, Apple is a behemoth. This is a company that is nearly unstoppable because of their loyal customer base. But nonetheless, the market eventually recognizes when sales are slowing and innovation is also lacking. Apple is one of those companies that was so innovative for so long, but in the recent years, they have really disappointed their buyers because of lack of changes in their technology. And so that makes us believe that maybe Apple is going to experience some kind of correction soon. Despite the fact that it has rallied for weeks and months, the stock is still below its all-time highs, which is still going to be our main resistance going forward for the stock. So obviously we have a resistance at 199.62. The company is getting very close to breaking out, but it has not broken out yet. If it does break out, obviously we'll have to judge our price targets based on momentum. We don't have a previous resistance that we can use to judge where the next price target would be. Now to the downside, Apple has a lot of supports to work with, but the most critical is going to be the 186.60 mark. This is where the stock pivots back into a bearish short-term trend, and it may continue down until it fills the gap. Remember, these are pretty aggressive price targets, both to the upside and the downside, so make sure you guys are checking back in and subscribe to our channel for future updates. The next stock on our watch list is going to be AMD, which, like Tesla, has been fighting in between the 50 and the 100-day moving averages. And so if you are looking at the daily time frame, the first thing you should be doing on a daily basis in the beginning and at the end of every day is you want to see where did the daily candle close in relation to the 100 and the 50-day moving average. Where did it open and where did it close? Because it's not enough that it closed there. You also want it to open above. Here's an example of where it closed above, but then it gapped down the next day. And so you need multiple candles above or below either line to confirm that trend. If you are looking at AMD on the short term, here are some levels to work with. But before we jump into those levels, I want to talk about AMD's fundamentals real quick, just so we have an idea of why AMD has lagged so far behind. At one point, NVIDIA and AMD moved in unison like they were twins. But now we're starting to see AMD moving sideways, and NVIDIA is obviously reaching new all-time highs nearly on a daily basis. The reason why is because when we look at AMD's price to earnings ratio and market cap, we see that this company is potentially highly overvalued. Their price to earnings ratio is currently at 243. That is 10 times the healthy price to earnings ratio of 25. The range that you want to look for a healthy price to earnings ratio is between 15 to 25, unless you are investing in a growth company that is growing their profits at a rapid pace. An example would be NVIDIA. For AMD, when we're looking at their profits, however, they are not growing at a rapid pace. In fact, they have declined over the last few years below 1 billion. So that means a company that is making about 22 billion is valued at 271 billion, and their profits are barely keeping up and they're starting to be on the decline. This doesn't mean AMD is a bad company, but when you're wondering why buyers are not buying it in compared to NVIDIA, when we look at NVIDIA's financials, we can obviously see the difference. So NVIDIA here is trading at a price to earnings ratio of only 70 in comparison to AMD's. But the thing about NVIDIA is that they're growing their annual profits at such a rapid pace that traders and investors are overlooking the price to earnings ratio being double the healthy average, but they cannot ignore the fact that AMD's profits are declining and the stock is currently way overvalued. Now, if you are a trader on AMD, and here are the short-term levels for you. I'm not saying that AMD is not going to go anywhere. It may very much rally alongside semiconductors, but when we look at their fundamentals, we would take their rally with a grain of salt. If AMD does manage to get some buying volume and it does continue breaking out, this would be the first resistance in place, and these are the next price targets for us. To the downside, which we are leaning towards a correction on AMD eventually, here are the levels to focus on, 149 being the pivot point before it sells off towards the 130s. The next stock on our watch list is going to be NVIDIA, which obviously saw a stock split. It feels very weird looking at NVIDIA and seeing it only at $120. But that's the stock split for you. Of course, NVIDIA rallied to the $3 trillion market cap. So NVIDIA is now the second most valuable company on the market, even more valuable than Apple. The only company ahead of it is going to be Microsoft. But something tells us that NVIDIA is going to overtake Microsoft's market cap to become the most valuable company on the market in the coming weeks or the coming months. If we are looking at NVIDIA's chart, here are some levels to focus on. Unfortunately, TradingView does not have the post-split levels yet, so we're just going to be working with the pre-split levels. And if you are looking at it here on the daily time frame, obviously Nvidia is trading above its 10, 20, 50, 100, and 200-day moving averages. So this company and this stock is extremely bullish. But now that the stock split is happening, we may see a little bit of profit taking. Our guess is that Nvidia will see a level below 100 in the coming months. And then below 100, it will start getting bought up between 94 to 97 before it continues rallying higher. We are in an Nvidia position and we will be holding towards our next price target, but we are seeing some volatility or some inconsistency in the coming weeks as the stock adjusts after the split. The next stock on a watch list is going to be Meta. Meta is, if we had to put our money on one stock going to 1,000 other than Nvidia, it would be Meta. Meta is one of those companies that has consistently beat revenue, and their revenue is extremely strong. This is a company that seems unstoppable, and they really have a hold on people. And so Meta may have been quiet over the last few months, but you guys have to remember that the majority of the money in the market has been going towards semiconductors, but now semiconductors are growing a little tired, which means that money may start flowing back to other parts of the market that have been quiet for a while. Meta is one of those companies. And so if you are looking at Meta on the short term, here are some levels to focus on. Meta broke out of this multi-week consolidation last week. So you can see after its earnings gap down, buyers were very quick to buy it up, but they struggled to get it back above 483. Last week, it managed to get back above 483 and now is consolidating above that level. So if you are a buyer, as long as it holds this level, then it is still in a very bullish territory. And these are the next breakout points that we have, and this would be the first price target. To the downside, here are the levels that you have to work with. We're not going to turn bearish on Meta unless it moves below 448. That's when we would consider a short or a put position, and that would also be bring it back below all of its healthy moving averages if you are looking at the daily time frame. Last but not least, Amazon managed to recover back above all of its healthy moving averages last week. You can see that it moved above its 100-day moving average and moved up. So remember what we just said about Meta. Semiconductors may be growing tired and they need to pull back and cool down, which means that money is going to be flowing to other parts of the market. Amazon might be one of those companies. If you are looking at Amazon on the daily time frame, just like we talked about on Tesla, the main thing you want to focus on is where did that daily candle open in relation to these moving averages. Those would be the 10, 20, 50, 100, and 200-day moving averages. You can see how useful these moving averages can be. You can see if you were just paying attention to the 100-day moving average, this was a point in which it had a major reversal and once again had a major reversal. You could have caught either of those entries. If you are looking at Amazon on the short term, here are some levels to focus on. Amazon is currently bullish above 182, but still needs to get above 188.40 in order for it to move to its all-time high of 191.70. Here are the downside supports. Unfortunately, below 182, there is not much support because you can see how vertical this rally was. Anytime there's a vertical rally, and then there's not much support to hold that rally on a pullback. And so if it does break below 182, it can very much move towards 174 in a matter of just a couple days. And below 174, these are the two price targets we have. Alrighty guys, so that's all we have for you. I hope you guys found this video helpful. Thank you so much for checking in. Make sure you subscribe and like.